Hello, I'm Brett Carleton, coming to you this quarter from Sugarland. We're at the Regis Suites out here, sort of improvising things today. So thank you for joining us. I want to take just a few minutes and talk about the first quarter of this year. From an equity market standpoint, it's been very good. It's really been a continuation of what we saw in the second half of last year with, again, anything around artificial intelligence. That's been generating a lot of excitement, and that has really been leading the markets. An example of that would be NVIDIA. You may have heard of this. This is one of the chip makers that used to be really big into the gaming chips, but now they're really big into artificial intelligence. And their revenue over the last 12 months has gone up 125%. So there's a lot of excitement around artificial intelligence. But for me, the untold story is what's happened is corporate earnings have remained strong in the United States, and the breadth of this rally has broadened dramatically. You know, last year we saw this recovery in these magnificent 7 stocks, but this year it's the other companies, as infrastructure companies, just more and more companies are participating in this rally, and that's what's been exciting to me is the resiliency of corporate earnings. And in spite of inflation, in spite of rising interest rates, companies have continued to make money. The other thing that I think of as I think about this first quarter is just the resiliency of U.S. consumers. Consumers continue to spend, they continue to travel. We're beginning to see a little bit of an uptick even in housing now that interest rates have leveled off. But just to give you an idea, I think there is still some post-COVID pent-up demand. We still have record amounts of savings, actually to the tune of $10+ trillion that Americans have in savings accounts at the bank and money market accounts, and they're spending it. And I think we'll continue to see this. So what I take away from this, though, will be the housing aspect. The biggest part of this is if we continue to see housing get strong, which the Federal Reserve has talked about beginning to lower interest rates later this year, I think that will be very stimulative for housing. And housing is a very important economic indicator because when people are buying houses, they buy appliances, they buy window coverings, they buy a new car, so they spend a lot of additional money. That on top of the fact that we have a real housing shortage in this country right now. So we have underbuilt housing since 2006, right sort of at the end of the housing boom right before the financial crisis. So there's tremendous need for more housing, and that's very stimulative because of all of the materials and the labor that goes into housing. So that will be something for us to watch here as we go through into this year and actually for years to come. So I'm still fairly bullish on the U.S. consumer, although debt levels have begun to creep up a little bit. Actually, all in all, U.S. consumers are very healthy from the standpoint of their personal balance sheets. I have a little prop here with me today. This is a book I read the first quarter of this year, Morgan Housel's Same as Ever. And the reason I bring this up is if you wanted a book to read, this is one of the best books I've read in the last several years. But in this fast-paced, constantly changing world that we live in, he talks about what doesn't change. And a lot of what doesn't change is how humans react to things, human behavior. And there are a couple examples I thought that I would read just maybe to entice you to read this book, but also just to see if this resonates with you. But for example, people will always be motivated by greed and fear, and they will always be susceptible to persuasion. I can't tell you over my 34 years how many people have come to me with investment schemes, investment ideas that I'm amazed that they brought this to me, but we're always susceptible to persuasion. Then he goes on to say, invest in preparedness, not prediction. He actually is a big fan of reading history as opposed to forecasting. Humans, we cannot forecast. And to save like a pessimist, yet invest like an optimist. And the reason I share this with you is because that's what we do when we're working with you, is we help prepare for these unexpected events that we know will happen. We just don't know what they are. Think COVID-19. Think the Russian invasion of Ukraine, the financial crisis. These events, they can't be predicted. So we have to make sure that our portfolio, your portfolio, that we can get through these time periods. Yet we've got to have money out there for growth, because we know over time, the optimist in us says that over time things will grow, and we want to participate in that. So again, this is not an investment book. He's a very great storyteller, and he actually has 22, 23 stories. Very historical, very interesting book. So love to chat with you if you like to read it, or if you just even want to talk to me about it. So, and the other thing I just want to finish on here today is I just want to talk a little bit about changes within Heritage. I know we've mentioned Denise's retirement, and in replacing Denise has been Nathan Burleson, who's come in as our client service specialist. So he was our intern for a year. And if you've ever met Nathan, you'll know, because he's 6'7", and it's hard to forget Nathan. But also at the end of last year, we hired Robert Dwyer as a senior financial advisor. And that has done a lot to increase in our capacity and our ability to handle new relationships. And a question that we get asked frequently, and I'm always a bit uncomfortable talking about, but we do have the capacity to add new families, to add new clients to Heritage. So if you have a family member, a friend, or a colleague that's asking you questions about financial questions or what you're doing, you think there's someone that you would like to introduce us, please let us know. We'll help with that introduction, and in a way that will be non-threatening to them. So having said all that, it's the end of the first quarter, the first week of springtime, and it's Easter this Sunday. So enjoy this weekend, and please let us know if you have any questions.